Okay, from last week, just before before over the holiday, I sent up a last technical outlook for the market. Um, in a nutshell, and we'll go over this in a minute, but in a nutshell, stated that prices were um, that they hadn't had even a half of a percentage point correction in 8 weeks, and that the market, looking at the internal gauges and the sentiment picture, was due for a high to occur early next week. And then on Tuesday, which is the first trading day after Martin Luther King Day, we did make new 52-week highs. And then I stated also that there were the two key levels to watch. First, to confirm that we were going to break was the 1287 level on the ES, which was broken. They also stated that to really get negative, that we needed a close below 1276 on the ES, and it made a close right at 1270 and a quarter um, on Thursday. That gave they held the 1276 level on a close. That led to a big gap up opening on Friday of almost 9 S&P points. I think it was eight and three quarters S&P points, right back to that 1287 area. And 1288 was a high, but 1287, 1288 now. That is they went back to the breakout point, which was then the breakdown point, and now they back to revisit that breakdown point at that 1287 area. From there, we've pulled back so far. The low, we had a 30-point drop, just about 30 points off the high. Now the next level, should we break under 1276, close under 1276, our next target, at least on an intraday basis, is at 1260 to 1258 area. And that's the next level where the market consolidated, broke out. Also would be another roughly 30-point move off the high, off of the 1288 high on Friday. Equal point move would take us down to 1260, 1258 on the futures being key. Okay, those are price levels. So let's take a quick look at where the internal gauges are. First, the bigger picture. Let's start with the some of the advanced decline oscillators here. Let me see. One second. Okay. The new high, new low oscillator line that had flattened out, still flat. And as I stated before, this not making a new high with the averages was a negative. Still flat. It rolls over. That's really going to be a sign of bearishness there. Okay, the advanced decline oscillator. This one is a summation index of the McClellan oscillator. That doesn't move as fast, but it turned and it's rolled over. Same with the summation index of volume, also peaked and rolled over. Now a variation of these, which I like a little bit better, we have an intermediate term up down. This looks different, and we got crossovers. It's more sensitive to current recent action, and it's really nosedive here, more so than prices. So still underneath the surface, the market is very weak. That's the up-down volume, and as far as the internal breadth, we made highs here in the middle of the rally, and all the way up. We stated, we were okay here, but when we topped out, divergence, rollover, that's a negative. That's internal wise. Advanced declines and volume. That's intermediate, a bigger picture look. Still negative on a bigger picture. As for, will we get a bounce out of this, or is a bounce possible? We have some things that are looking interesting here. I'll go through this real quick. Oh, lastly, I don't know if I mentioned the positive negative momentum oscillator. had stalled at new highs, and it also has turned down. Not going anywhere just yet, but a little bit more downside would break it. Okay, internals. One thing the market, it did make good on back-to-back days with the closing trend below or over 1.00. Short term, what I'm looking at here is that my RBI model is close to, for the first time in some time, getting oversold. It's at -6. The better readings are down here around -10 to 13 for lows. But it's short-term oversold. My 3-day thrust oscillator dipped to -0.50. That's a short-term oversold. In addition to that, we have the Herlin index has really rolled over. Could go away, still has further to go, potentially there, but a few other things, very short term here. Come down here, the weighted combo oscillator from my friend Toby. This is below the bottom band. Generally, the last time here we got a bit of a bounce, and it led to more, but at least it's got a bounce. Last time here led to a low, but it's generally pretty good at very short term potential turning points. We move on over to it's not there yet. The 5-day open thrust would need to get under there. Oh, let me move on. This is what I want to show. As far as overbought, over internal gauges, those are short-term oversold. Now back to the sentiment gauges. I mentioned last week that this the 85.30, the ratio got to 85.30 on the S&P VIX ratio, which was a multi-year high. It's since in the last 4 days dropped below the mean and could revert down here to the bottom band, where we would expect from recent action that we could get a decent turn. Okay, but it should, now that it's broken, revert to the mean. We're looking for that. The VIX gave us sell signals right before the downturn on sell signal here, and a buy signal coming into Friday, which market did close up but traded down after the opening gap. We have the VIX, which mentioned it reached a 52-week low last week. Now it's almost to the top band, so if that should get above the top band and then reverse, that would be a buy signal. That's close. Also, the 5-period RSI in the VIX, this gave a sell signal by reversing up over 30. Now it's above 70, and it turned down. So we're watching the VIX for, if it reverses, could give some VIX buy signals. That's potential here. One other look at sentiment that shows a shift. I mentioned the put call ratio was at third lowest reading in about 5 years, and last week it got down to 0.48. 0.47 was a lower reading here, but it has turned obviously from a very low reading, and don't have the euphoria after last week's drop. Okay, so looks like intermediate term things are not looking good. Short term, we could get some kind of an oversold bounce. The key, again, the keys to be the price levels. Resistance 1287, 1288 area. is now key on the upside. In order to transition back to the upside, we'd have to get back over 1288, 1287, 1288 area. That's on the upside. On the downside, we have to close at 1276 to turn it down, under 1276, I'm sorry. And below that, we have the 1258, 1260 to 1258 now will be major support on the ES as far as prices go. If we get down there and get further oversold and get the VIX reverses and gives buy signals, then we have a good odds of a short-term bottom in place and a nice bounce. Doubt that it's going to last, however, given unless the intermediate term picture really shapes up. One final thing, I mentioned trades to the group on the VIX, so a new play on the VIX, so the VIXY, and it reached a low on last Tuesday down at 66.42 and got all the way up to 72 and change, 72.04 on Thursday. As you see, it's just starting to get some liquidity. It's brand new. But we did have some traders in the group who got on board the volatility with the VIX at the low and made a nice trade, even though liquidity was thin. Still tradable. It's a new way to trade volatility, and the VIX strategies that I use, those will come in handy down the road. So, all right, quick recap here. We have the S&P having broken down under 1287, which is a negative. It averted disaster by closing at 1276. Bounced from there with an oversold condition and VIX buy signals, was reversed on Friday's open, and we traded down for the most part of the day, especially the NASDAQ got hammered. So we could get a short-term bounce. That shouldn't stick, and it's a short unless there's a close back over 1288, and then stay there for at least the first 2 to 3 hours after it's closed above 1288. That's what it's going to take to change trend here. Okay, a wrap up of a little technical work that I use after the close to see where we're at. Bigger picture, wind is blowing downhill. Short term potential bounce, but from lower prices would be a better opportunity for a snapback rally. Hope this is some help. Come with TradeStalker.com. Give us a try and get a free trial of the updates, intraday updates, nightly updates, and hope to see you there.